Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, October 15th, 2020. And what I want to do in this video is an update on the equity markets, follow up to my post this morning. We hit those minimum pullback targets on QQQ as well as IWM. And so far, our reaction is expected. So I want to talk about that a little bit, follow up on one of the charts that I posted below this morning's post. I always encourage you to come back in if you're actively trading or just kind of following what's going on in the markets. Check the comments section. Myself and others will post things in there. And usually if I do a post, whether it's static charts or a video, if I forgot something, I'll follow up there. Okay, so what we're going to do is go over, really I'm focusing largely on IWM and QQQ right now, small caps and large cap techs really. And then I had a few trade ideas I mentioned the other day. I'll update those. Long and shorts, not a lot. It's been slim pickings right now to find very objective long or short trade setups. Okay, let's just recap what's happened today. And again, this kind of dovetails on the comments this morning. I'm going to turn on the after hours trades. And in pre-market today, well, let's do that. We effectively backfilled the gap. See, this is QQQ. This orange box is the gap I was talking about. On Monday, on Monday's post, I said I had a minimum target, a pullback target of 286, and that was just above the bottom of this gap today. And there's a candle in pre-market. You can see right there. We hit a low of 286.15, so close enough, you know, on a $286 security, 15 cents. And I always say, you know, cover a little bit below. I'm sorry, if you're shorting, you want to cover a little bit above the actual support level where you expect the bounce to happen. Now, a lot of traders could see that gap. You know, it's a well-watched level, and this is just a great example, technical analysis. A gap once entered, as it was this morning. You can see when pre-market session opened today. See this first red candle right here? It opened right on the gap. There's the top of the gap right there. This is the bottom of the gap. And I'm referring to Monday's gap. We entered the gap, and then we went on and backfilled it, and then the buyers stepped in and haven't looked back since. So far from, you know, low to high this morning, that came early around 6 a.m., but it's been a rally of about 1.5%. And again, you know, we can go down, but the odds highly favor on the initial tag of a well-watched support level like that. The odds favor at least some type of reaction, and that's what we've had so far. Let me show you. Let me turn off those after-hour trades. I want to only see them when it's in pre or post market. Daily chart on QQQ. The trend line's a little bit different because when you draw a trend line on the daily chart, and I believe I showed this in recent videos, to the bottom of the candles, right there, there, and there. Now we hit that today. So this is our trend line. At least again on the daily chart, and we're above trend right now. But let me show you one other chart on QQQ or the NASDAQ 100 futures. Then we'll get to IWM and then move on to those trade ideas. All right, so the post this morning, minimum pullback target hit. Again, that was laid out on Monday's post in pre-market when we hit the top of my uppermost bounce target zones there. We're very overbought. Divergences on the futures, as again, you can visit that post on the site. And shortly afterwards here, posted this. Well, let me read what I said first. Note that rallies that followed to drops to the 27-ish level on the 60-minute RSI, that's an indicator of being overbought or oversold. Oversold is typically considered 30 or less, but I have different lines. I don't go by the defaults, you know, that most charting programs put up 30 and 70. They work for some stocks or indexes, but not others. So I always like to, you know, look at where a security is deeply oversold, where do the reversals come, or deeply overbought, and then put up my own lines. And on the 60-minute chart of NQ, that level, I have it right around 27. So I said, well, it doesn't assure it this current drop to that 27 level, 27-ish level, again, RSI reading, increases the odds of a tradable bounce off this drop to support. So there's two things there, the takeaway. It's not just the drop down to the 27 level, I'm going to show you there, but it's also a drop to a very significant support level, and which is dual support, uptrend line support and price support on QQQ to backfill that gap. So here's what it looks like there on the NASDAQ 100. And hopefully you can make this out in the video. Pretty simple stuff. I have yellow boxes on there that I put, and you can see that's it. So this line right here says 2682. So again, round it off. Some of these reverse just a little above that. Call it 27 if you want to round that off. The high number The high number where we typically pull back when you get overbought is around 87, and that's what I mentioned the other day. We're extremely overbought, and usually when you're overbought, you tend to push up a little bit more, and you often get divergence. So you hit that extreme overbought reading. It's not unusual to push a little bit higher, and in doing so, the RSI makes a lower low, and that is negative divergence. So that's exactly what marked this top, and it was a nice, clean, bearish rising wedge pattern. Well, here's all the drops. So you can see the yellow circles. I won't spend much time on it. You can go. This green is buy. That's overbought and oversold. And if you bought there, that's what you got. If you bought there, you got that. If you bought here, you got that. If you bought here, you got that, that. And look, some of these were small, and this was in, again, the worst correction that we've had since the March lows, when the market plunged, when it first realized COVID was a real thing. And once we bottomed, this was at 60-minute divergent low. Those rallies have been a little bit stronger. And here we are again. So NASDAQ 100, particularly QQQ, is at support. And so this makes the case again for a tradable bounce. And so I think there might be a little more upside to come in addition to the 1.5% or so reversal that we've already seen today. Okay, IWM, same story. Nice reversal right off dual support, uptrend line, plus that support zone that I had here running from about 158.93 up to about 159.83. So we'll call it 159. And boom, that's it. That's pretty much what we hit today at the low, 158.81. Close enough, on 160-point security. And so far, good for, there's the reaction off the initial tag of support, about 2.6% rally in IWM so far. Where do we go from here? Well, a couple other things to note. I just mentioned that, based on that NQ chart, there's usually more upside. PPO is turning back up on IWM right here at the zero line. The zero line often delineates bullish and bearish trends, meaning when this one right here, the signal line, the 9 EMA, is above it, the trend is bullish. And when it crosses below, like it did right here, the trend is then bearish until it crosses back above. Then you get a bullish trend, which you had here. Cross back below. We've had a lot of volatility, but those are little micro trends or tradable trends, and it's not a be-all end-all. But quite often the zero line will act as support when tested from above, and you can see the PPO curling up. So as long as that remains intact, we could get a little more upside here. Mixed signals, let me tell you, mixed signals for sure. I'm going to just touch on one long-term chart, and there's a potential uptrend line right there. Let me go to that long-term chart, and then we'll look at the trade ideas. Oh, and before I do, let me just say, at this point, the next objective sell signal or short entry would be above on the break below the lows. Now it's going to be quite a ways away because we bounced pretty far, but that is support, and all the indexes reverse there. In fact, I want to go over the FAAMGs as well. I'll do that before I get into the long-term chart I'm about to show you, and we'll look at the FAAMGs. Let's go to Apple. Here, let me do this. If I load QQQ, it's going to load a watch list I have to the right of the page. You can't see that, but that watch list lists all the components of QQQ in order of descending market cap. So with the largest one, Apple at 2.1 trillion. Okay, here's why. Again, this helps support the case for a bounce. There are a couple things I'm watching on these market-leading stocks, and remember, the 5 largest stocks, which I call the FAAMGs, FAAMG. That's Apple, Amazon, Microsoft, Facebook, and Alphabet. Those constitute a bulk of the returns, a huge overweighting in the NASDAQ 100. So really, if you want to know where the index is going, you just have to know where those 5 stocks are going. And so what happened with Apple? Well, today we gapped down at the open, had a brief overshoot, entered the gap, but then reversed right above it. Here, I'm going to zoom in really tight. You can see that's the opening candle. It's a 30-minute candle. Remember, when the market opens, it opens at 9:30. Your first 60-minute candle actually closes at 10 o'clock, not 10:30. Why? Because there's 6.5 hours in a trading day. So they truncate the first candle, 30-minute candle. The rest are hour, 60 minutes of trading. And you can see we got above it, and it held the gap like a champ, the top of the gap. So, remember, gap support, you have the top is the first logical support area. If that's entered, the gap is often backfilled, and the bottom of the gap becomes the next support level. So Apple did that at the very same time that it held the top of the gap. It also held this uptrend line right here. you can see a perfect tag there. So that again helps support the case for a bounce. PPO is still positive. Here's an example where Apple's been in an uptrend. It was in a downtrend all the way here. You can see how that PPO signal line does a great job as a trend indicator. Trend was bullish right up to here. We crossed over. This said bearish. PPO came back to try to cross the zero line. Again, I'm looking at the PPO 9 EMA, the signal line, the white line. I use that because it's the last of the two to cross. Got rejected, told us, nope, still a downtrend, stayed there, tried to, flirted with the zero line here for a while, finally broke above it right there, clearly broke above it, and that started the uptrend that we've been in since. So the PPO signal line has been, and with some tests along the way, successful back tests of that zero line. Like I said, it often acts as support and resistance. So right now, that's bullish, and a PPO it appears to be turning up. The blue lines will turn up first, and so if we can cross here, we're going to keep the trend intact. However, if we break this, you have trend line support and then the gap support just below. So this is bearish. Anything down there, especially break of the bottom backfill, a break below the bottom of the gap as well as that trend line. Until then, like I said, trade it as you want. The previous oversold readings that I showed you earlier on NQ were good for at least a few percentage points, so there could be some more upside here to come. Unless this market just turns around and dumps and breaks those levels, and that's where, if you're long, that's what stops are for. You can see these levels, and I always encourage you, even if you're only trading QQQ or only trading NQ, Nasdaq 100 futures, you're really doing yourself a disservice if you're not charting the FAANG stocks, Apple, Amazon, and looking to see what those are doing. Because if 2 or 3 of those, or the majority of those, start cracking support levels, and even if QQQ appears to be at support, but these big things break support, then they're probably going to take the market down with them. Next up, Amazon. There's your gap right there. And I'm referring to Monday's gap, and perfect gap backfill. Look at that. Backfilled the gap this morning on a gap down. But now, if you're looking for resistance, if you just wanted to play a quick bounce today, here's one, and it's not the entire market, but it's one of the FAANGs coming up to today's gap. So you have, Monday's big gap right there, that was backfilled. And look, every single 60-minute candle all day until recently successfully tested the bottom of that gap. So if you're not a believer in technical analysis, the significance of gaps, I don't know what else to say, because they don't always act this well, but most often it does. You'd be surprised how often traders step in and trade off these gaps. All right, there's the PPO curling up. Signal line is still bullish right there above the zero line, and that says that the current trend is still bullish. Of course, there is a little bit of there was a minor trend line break right here, so you have to respect that. At any point in time, there's going to be mixed signals, and this, that breakdown was bearish, and it led to that gap down. So resistance levels, let me make it very simple. Right now, the top of today's gap. Next resistance level would be a back test of the trend line, wherever that comes in. It could come in there, could come in there, could come in there, but that would be your next resistance level. And then, of course, watch the trend indicator as well. Oh, and very simple. It's going to be the common theme as I'm going through these FAANG stocks, and we'll run through them pretty quickly. A break at today's lows. You want to make it very simple. Today's low was support on the majority of these stocks. Was a support, as I just showed you, on Apple. It's support here on Amazon. Support on QQQ. Support on the small caps. So you want to keep it very simple. That's your next. If we do break, turn around anytime tomorrow, whenever, and break today's lows, that's going to be likely open the door to the next wave of selling. You can see some potential targets there. So next up would be Microsoft. Mr. Softy, and interesting. Another one. Again, this is not mere coincidence. Here's the gap. There's Monday's gap. It wasn't nearly as big. I missed the top of it there. I didn't box it in proper. But let me try it one more time. Okay, this is the top right there. There's the bottom of the gap, which is that orange line. And that orange line is also the top of a multi-month trading zone. Perfect backfill of the gap, and then off to the races. Again, this is what traders look at. So 2 things happened today. In the morning, because of the drop in the futures, it caused a gap down, which triggered a near-term sell signal, and that was good for a pretty good drop. but you had to be quick because you hit support, and then again, well, support where a reaction was likely. And so far, the turnaround in Microsoft has been, about better than 2% or so. That trading range I talked about, um, beautiful multi-month trading range right here, that orange box we were in. And the way trading ranges work is you typically run up to the top and then you visit the bottom, top. And there's also a midpoint in just about every trading range I've ever seen. Sideways trading ranges, even price channels, if they're upward or downward sloping, if you put a midpoint line, you'd be amazed how often that midpoint acts as support and resistance. Here, let me show you that, and then I'll finish back on this. Kind of have some fragmented thoughts here, but I want to cover a lot of stuff in this one. Boom, there's your midpoint line. I'm just eyeballing it, between and you can see all the reactions that we had above there. Sliced through it a few times there, but here's an example. We came up and bounced below. Now I might have to actually I don't always put it exactly in the middle. I put it where the most reactions are. So I'm going to drag it down here because I think that's the fit. And you can see it's slightly below the midpoint. And now let me show you the reactions. Ran up there, pulled back to the bottom. Pulled back. This was a straight down drop, so that's what I call momentum fueled overshoot, and then we snapped immediately back above it, traded on it for a while, whipsaw through, but then look, a lot of reactions there, resistance, and we took it out with a gap. That gap led to a run to the top of the trading range, then back down to the middle, back up to the top, and then we had a breakout. And that breakout, as I often say, breakouts that occur on overbought conditions and with negative divergence have a much higher rate of failing than those that don't. And that's what that was. That was a failed breakout, aka bull trap, whipsaw signal. And that led again to the biggest drop that we've had in months in Microsoft. That was the big correction that just came. And again, what did it do? Well, since it was a false breakout, it threw us back down in the trading range, hit the midpoint, bounced back to the top, hit the midpoint again, top, and then finally took out the midpoint, bottom of the range, and then worked its way here up to the top of the range and recently broke out. So here it is. We're back above the trading range, and you need to respect that. That's support, and so there's the bottom line. I think a break below that support level, it's going to be bearish for Microsoft. And again, the more the fangs that break down, the higher the chance it's going to take the cues down. Microsoft could do this and have a little whipsaw signal if everything else, all the other stocks hold support. So you want to watch them all together. But as of now, we held support. PPO is bullish, turning up at the zero line right here. And that could indicate a little more up. And next up, Facebook. Zoom in real nice and tight. There's the gap. I'm preferring again to Monday's gap right there. Actually, the box is a little bit off there. I got to hit the Friday's closing candle. That's Friday's close. There's the bottom of the gap. Look at that. Boom. Perfect. Little intra-period break. And each of the bodies, look at each of these bodies closed right on there or above. And so far, it's running back up. So resistance on Facebook would be the top of the gap right now. We've already entered and backfilled it, so then you have, of course, today's gap as well. So there's the top of today's gap, that dashed yellow line. So those are your levels for Facebook, and like everything else, bearish on a break below today's lows, and then you have a potential uptrend line as well to watch there. Alphabet, the stronger than most. It did break this minor trend line right here, and still above Friday's gap is right here. So it's the only one that actually didn't test the top of or bottom of Friday's or Monday's gap, that is. Tesla I like to talk about only because it's one of the big, had the big split with Apple back at the end of August, and same story. We're still, everybody that bought in the day of the split or on the rally afterwards, almost all those traders are still underwater because we remain at the bottom of that range. Let me move it over now. There you go. You can see that. So there's been a pattern of selling every time we get up back to the bottom of that range. And right now we have, again, a lot of traders that bought into here underwater. Again, if they didn't stop out, the stock fell 35%. But just knowing the retail crowd, I'm sure there's a good part of that did the hold, what do you call it, buy and hope, or hold on and pray. And so they see it coming back here. And again, the story to me is pretty simple, not to oversimplify it, but if Tesla can break above the range, bullish. Otherwise, you have two trend lines coming in. That one goes to the left of the chart and this one, and they're just below. If we break that and have another rejection off this, bull trap buying climax range, the post-split range, that could send us all the way back down to 333. That's probably only going to happen if the Qs break down and all those other stocks like I just went over take out today's lows. Okay, and just a quick recap. If you haven't been on the site in a while or new to the site, remember, bigger picture is this. This is one of my favorite sentiment indicators. It is the CBOE equity put to call ratio. So it's measuring the ratio of put buying to call buying, and I've used this one for many years and find it to be one of the most reliable indicators for major inflection points in the market. And you can see I have two lines. Up here is my extreme bearishness, fear or buy line. And then down below is my extreme bullishness or complacency or sell line. And so you can go all the way back. This is the last bear market right here from 2007 to 2009. That was one heck of a rally. I know because I was there trading it back in October to November. And it was signaled by a hit of that level. The bottom of the bull market came on that second tag. So that was the best buy signal. If you're looking at it as a long-term investor, best buy signal in many decades right there. And then we had a big correction back, those you might remember back in 2015. It was really about a 2-year bear market. We went sideways to down for over almost 2 years, and a couple big corrections along the way. Again, the market peaked here, and it told you right here you had a double tap reading when it was over. And that was, again, one of the best buy signals in many, many years. So I love this indicator. You can see that. There was the big drop back in the fourth quarter of 2018, hit that line to the T. And again, one of the best opportunities in many, many years right there. And then finally, the COVID drop right there into the March lows. And again, obviously one of the best buy signals in many years. Now, you can go back to, in the last couple years, you can see the sell signals that came. That's what we're focusing on right now. We had, first of all, let's talk about recently. We've had a cluster of readings, not just one, but persistently low readings, several tags. This is what I call a cluster. If they come in close proximity, it really counts as, in a way, just one reading, because it's even if they're months apart or several weeks apart, they're all in close proximity. Last time we hit that level was right here, and that was one of the biggest corrections that we've had throughout the entire bull market. And then back here we had it, and that was a huge correction right there, well into the double digits, and we had a reading right there. Again, one of the biggest corrections. So all this is telling me is there's a dangerous lopsidedness in the market right now. A lot more people holding and buying calls, meaning they're bullish, than puts. And the market will correct that. It almost has to because the commercials that are selling the options, they have to hedge up. And what happens? You just get an imbalance. You have too many bulls in the market. That means shorts have given up. There's not a lot of short interest, and that's where the big drops come from. So we're not beyond there. We had a drop, and again, it was identified weeks ago, early September. I gave you the sell signal, and it was the biggest drop in months. It was about 15% or so in the Nasdaq 100 futures, I think. But it doesn't mesh with these previous drops, which lasted many months and were considerably deeper. So I just wanted to point that out, that this is, I'll say it's tempering my bullishness. Right now, told you my focus is near term. I'm talking about what happened today. There's a near term bounce, trade to be made off today's lows when we hit support with those oversold readings. How far it goes, we'll see. Maybe just trail your stops up if you're going to take anything home tonight, or take profits. We had a nice reversal, 2% or more in the small caps. I think close to 2% on the Nasdaq 100. And if you're looking for bounce targets, I just added this trend line here. This is RTY, the small cap futures. And we can probably do the same thing on IWM here. Excuse me. There we go. Something along these lines right here. Potential downtrend line. Why did I call it potential? It's not a valid trend line yet. We only have a couple reactions. Need at least 3 to validate it. But again, we've had a nice reversal. And based on everything else, remember, we're coming off this divergent high. And so is the correction that we've had so far. This was a big, steep rising wedge, extreme overbought conditions. Again, we hit my minimum target. But you know, I have potentially higher targets. Just have to take those levels out. I think that's probably most of what we're going to see for the rally today. And in fact, well, the market's almost closed. I just looked at the clock. I thought I had more time to go. We're closing in 2 minutes. All right, let me get to the trade ideas real quick. All right, so let me start with, I'll start with the shorts because I covered, I've been posting a lot on that DKNG, the DraftKings short trade idea. That one was posted back here before it broke down with an entry to come on a break below this uptrend line right here. You got it back here on Tuesday, October 6th. It was impulsive, and we didn't gap down. We moved below the line and just kept going. So it was everything you wanted to see. I say that because sometimes you gap so far below a entry point or a support level that it's not always so objective to enter the trade at that point. But that one was, and good so far since the breakdown for about a 25% drop. I want to point out we took out that first target on the daily chart here, 47.37. But as an active trader, I like the 60-minute charts. They're a little bit more accurate. You can pick up levels. And so when you look at it this way, it's just a beautiful setup with a bearish rising wedge pattern right there, negative divergence. And breakdown, paused right before that first support target at 55.39, gap below it, back tested it, gave you another objective short entry on the back test, hit the next target at 48, gave you an opportunity to cover if you're an active trader, game a bounce, and then we took it out today and we didn't gap down, we broke it, and boom, since we broke it at 48, we went down about another 7%. So there was another trade to be made. Again, whether you're micromanaging is, that's what I call when you might be swinging down to 44, but you're going to play the bounces or the initial tags off the support levels along the way. So that's coming up to, at least on the 60-minute, that would be and is my final target right now. We're going to be setting a positive divergence on this one. I think you can, active trader can reverse and go longs here or anywhere. If you can get a little closer to $44, I expect it to rally there because we have the divergence and at least a bounce. It's a pretty good or well-defined resistance or support level, again around 44. And if we don't bounce, that's possible because when I look at the daily chart, I don't have support there on the daily. I have, in fact, just taking out support. That's why you can see different things on the 60-minute, but there it is. I probably should add that line there because this is what I'm picking up on the 60-minute. What do I see here? Why did I add that line? Well, reaction, 2 candles there, another candle there, 2 candles right there, the high of those 2 candles, and so there it is. So we're coming up on support. And if we continue lower, if you just want to hold on to this one because you took it, these are still potential targets. All right, enough on that one. PEIX, not ready yet. I mentioned as a setup, there's a huge difference when I talk about a trade setup, whether it's long or short, versus an actionable trade. This is a trade setup. It's a stock walking up a trend line with negative divergence, bearish rising wedge pattern. It's had a heck of a run off the bottom. This is, again, Pacific Ethanol. Needs to break this trend line, and when it does, I need to clean these lines up and give you targets. That's one thing I realized. I mentioned it the other day. I have to adjust these lines and take that one away. Those would be it right there. I just don't have the levels turned on right now. This 380, that's an old number. That's an old level I had from before, so ignore that 380. Let me just delete that out. These would be your targets. Again, pending a break of the trend line, especially an impulsive break and or a solid close below. A couple others, SPLK, Splunk. I don't know if I mentioned this one the other day or not, but I got a trade alert yesterday on it, trend line alert. Break of the trend line followed through today. I think this one's heading down here to at least that 190.26 target and quite possibly the 171 target. Let's see, I have a few others, but I'm going to just focus on those now and give you some updates on some long trades and some new long trade ideas. NG, I've been posting frequent updates on NG. That's it. your downtrend line. If you're just catching up right now and haven't seen the posts over the last couple of weeks, we had a bearish falling wedge. I'm sorry, bullish falling wedge confirmed with positive divergence at the lows right there and there. That's the divergent low. Impulsive breakout, hit my first target resistance at 2.7, called about 2.7, pulled back tested the wedge, moved up, broke the 270 resistance, rallied up to the next target, which is 219, oh no, 2915 plus the intersecting downtrend line. When you have not one but two resistance levels that come in, that's all the better. And we had help to validate that trend line with another reaction there and pulled back, validated it again right there. There's another reaction and we're close to it now. So that would be your next buy signal, pop above the trend line and then a pop above 2.1915. That should open the door to 3.146. Again, unadjusted. Those are actual resistance levels. So you want to set your sell limit orders a little bit below. At this point, stops. You're making a series of higher highs. Might as well have a stop, not much more than below this recent reaction low right there. Or there's that 2.592 support level. Yeah, coffee hanging in there. Pierced this minor uptrend line today. It's really not taken off. Coffee often, when it gets in a trend, it's usually a pretty strong trend. But there are times, like the last time we went long coffee, and it was official long trade on that site, was back here. I was on a breakout above here. I'll just zoom back where it was. It was on a breakout of this downtrend line. So what you notice is you had a downtrend line, and then finally towards the end you set up a little wedge type pattern. You had that bullish divergence right there. You broke out, and then you fell back down. You back tested. You came back to the breakout point, and you floundered around for a while, even went a little bit below the breakout point, but then it started to run with an A, B, C type wave at that point. And here we broke out above this downtrend line recently after putting in the divergent low, kind of floundering around. It's not ideal price action. You want to see it. I've been saying you want to see coffee remain above that recent reaction low. Ideally, that's a good place for a stop. Not too far below there. And if so, you still have the next target at about 115. If it can take that out, then these are other potential targets. And that's KC Coffee Futures. I almost forgot the ETFs too, or ETNs. If you don't trade futures, JO is your ETN for coffee. Similar thing on the 60-minute chart. Positive divergence, bullish falling wedge, breakout, hit that 33.92 first target, pulled back, and it's been bouncing between that 32.30 support and 33.92 resistance. So that's it. Story is it needs a break above 33.92 to give us the next buy signal, and any break much below 32.30 is not going to be good. It will. I have to say this: it's not the end of the world if you're playing the long game and giving it some room. If we do break anytime soon below 32.30, let's say we go down to this next support around 31.47, like this. Well, and we turn around from that point, what it's going to do is still have a divergence. In fact, it'll be an even larger divergent low because these indicators are, guaranteed if it happens anytime soon, a marginal new low, you're guaranteed to have that positive divergence there. So trade it as you will. Coffee's a volatile instrument, just like natural gas. I don't think I gave you an update on the UNG chart. But there it is. Covered it quite a bit lately. Those are all the levels if you're trading. Next potential targets all the way up here about $14. And there's our last reaction low around 11.75. So you want to stop somewhere not too far below that level if you're trading nat gas. Couple more and we'll wrap it up. QTT, not one of my favorites, but again, I'm looking hard, trying to find some trade setups for you guys. This one, it's in the internet content and information arena, and it's not been doing so hot lately, but it is building up divergence right here. You can see positive divergence building on the indicators. There's a little minor downtrend line recently that was taken out, and we're coming in for a near back test. We're not exactly there yet. Well, close to it, yeah. Very close to it. Okay, so that's it. Now we're closed now, so we're not going to do anything by the time you get this video, but tomorrow, if we're still on that trend line or we reverse off it, that's an objective long entry because that's a breakout and a back test. And then you can have a stop somewhat below. Stock's in a downtrend. I wouldn't give it too much room. And you can see targets up here, all these targets marked. QTT. I had XXII is another one. This is 22nd Century Group. It's a drug manufacturer, specialty and generics. And I have this little downtrend line here, which just it punched through the other day. It's been working its way down. It was putting in a pretty big divergent low recently, or did put in a divergent low, and it's a pretty impulsive breakout so far. I've tried to box that in the last 2 days. Sorry guys, having a hard time with my drawing tools. Box tool, there we go. Yesterday's breakout plus follow through today. Where does this one go? Be careful with these little low-priced. This one's actually under $1 a share, so I need to throw that out. If you don't know what you're doing, you're new to trading, you're risk averse, which is a little bit of an oxymoron if you're trading. But if you're not a very aggressive trader, do not trade penny stocks. I'm just showing you where this one may go potentially. That would be a first target up there at about 120. Volume's nice. That's what I look for in breakouts. Look at these volume parts the last 2 days. So there's a trade idea for you cowboys or gunslingers, we call them. LKCO. Again, you can kind of hear it in my voice. It's like meh. I'm looking at a nice downtrend line, but nothing on the breakout. It's unimpulsive, no volume, no surge in volume. I like to see at least 1.5 time increase in volume, and I don't see that. But I do see stock building divergence. And with these stocks, when they fall below $1, that's bearish. If they stay below $1 too long, they risk being delisted. But what happens is if they can get back above that dollar share price, you often can the stock will rally. So one to watch. Again, not my favorite, but again, it's a function of me struggling for individual trade ideas, and that's why I'm continually lately I've been updating the equity markets and a few commodities that stand out, or any other individual stocks that stand out. So I'm going to wrap it up here, get the video out to you guys, and yeah, that's it. I think I said enough on the equity markets. Watch today's lows as a break of that being bearish. Otherwise, the fact that we held support, we rallied, we hit those extreme oversold readings on the NASDAQ 100 futures, and that may lead to a little more upside here in the near term. This has been Randy Finney with Right Side of the Chart. Have a great evening.